This may be the biggest DMart question right now. Not whether stores are crowded, not whether the company is profitable, not whether the brand is trusted. The real question is far bigger. Can quick commerce break the DMart stock story? Because if the answer is yes, even partly, then this is not just about groceries. This becomes a valuation story, a growth story, and a wealth story for investors. If you own DMart or plan to buy it, watch this till end. For years, DMart looked almost unbeatable. Low prices, efficient operations, strong customer trust, disciplined expansion, large stores, fast inventory movement. It was one of the cleanest business model in Indian retail sector. And that is exactly why the stock got so much respect. But now the game is changing. Earlier, the customer asked one main question: where can I save my money? Now the customer often asks a second question too: how fast can I get it? That small shift is massive because quick commerce is not selling only groceries, it is selling convenience, and convenience can be very addictive. When customers get used to 10 minutes or 20 minutes delivery, behaviors changes. Plan purchase became instant purchases. Nearby store became less important. Waiting feels painful. Time became more valuable than a small price difference. That is why investor must take this seriously. Now understand one important thing. Quick commerce does not need to destroy DMart for the stock story to change. This is where many people think wrongly. DMart can remain profitable. DMart can keep growing. DMart can stay respected. And still the stock can lose premium valuation. Why? Because stocks are priced on future leadership, not on survival. If investors start believing DMart's future advantage is smaller than before, they may pay a lower multiple. That alone can hurt returns. Now let us see the real pressure point. First, urban baskets. In big cities, many customers may shift repeat purchases to quick delivery app. Even if they still visit DMart for bulk buying, frequency can change. Second, pricing perception. If the price gap between quick commerce and offline retail narrows, DMart's strong historical weapon became less powerful. Third, convenience habit. Once habit changes, winning customer back becomes harder. Fourth, investor confidence. If market thinks growth will be slower or more competitive, valuations can compress. This is why the issue is serious. Now, to be fair, DMart still has real strengths: huge brand trust, strong sourcing power, operational discipline, physical scale, experience in value retail, large runway outside top metros, and its own online platform that is DMart ready. So, this is not a one sided story. DMart is not helpless, but the easy story is gone. Earlier, investors could simply believe DMart would be keep winning because of low prices and clean execution. Now, DMart must prove it. Can it win in world where price is not only decision factor? Now, speed matters a lot. App matters, delivery matters, digital habit matters. That is a different battlefield. So, what should investor watch from here? Watch same store growth in urban market. Watch whether margin stays healthy or increase. Watch whether demand ready becomes stronger. Watch whether stores expansion remain productive. Watch whether customer traffic stays strong. Watch whether management adapts without damaging profitability. Those signals matter more than headline. Now let us answer the big question. Can quick commerce break the demand stock story? My honest answer is this: it can break the old version of the story. The old version where investor assumed DMart would keep dominating easily. That version is under pressure. But can DMart build a new version of story? Possibly yes. A version where offline skill, trust, and smart adaptation still create long-term value with a online format. That battle is still open, and that is why this stock is so fascinating right now. Because this is no longer just about retailer. This is about whether one of the India's most respected stock narrative can survive change in consumer behavior. And when consumer behavior changes, fortunes in stock market can change even faster. If you want serious stock breakdowns in simple language, subscribe now, like the video, because here we do not follow hype, we follow where money can be made or lost. Thank you very much. See you in the next video. Thank you.